This morning, the world witnessed a seismic shift. China slapped a staggering 75% tariff on all US electric vehicles. This isn't just another trade spat, it's a declaration that the era of cautious maneuvering is over. A new, more aggressive chapter in US-China relations has begun, with global consequences. The move will reshape supply chains, influence diplomatic ties, and impact consumers everywhere. Electric vehicles, once a symbol of green progress, are now the front line in a clash of economic systems and ambitions. The US sees its technological leadership challenged. China wants to set the rules for the next century. This tariff is a direct response to American tariffs and tech restrictions aimed at curbing China's rise. For years, the two giants danced between competition and codependence, but now the gloves are off. Beijing's calculated risk is designed to inflict pain on a key American industry and show it's ready to set its own terms. The stakes? Nothing less than the stability of the global economy. A full-blown trade war could derail recovery, trigger recession, and force nations to pick sides. From Detroit to Shanghai, Silicon Valley to Brussels, the shockwaves are immediate. The world holds its breath, waiting for the next move in this high-stakes drama. The question, who will blink first? To understand today's crisis, we need to look back. For decades, US-China relations were built on engagement. America welcomed China into the global economy, hoping for prosperity and reform. China became the world's factory, lifting millions from poverty, while Americans enjoyed cheap goods. But beneath the surface, tensions simmered, trade imbalances, job losses, intellectual property theft, and state-backed Chinese firms. Hopes for political liberalization faded as China grew more assertive. The 2018 trade war marked a turning point. Tariffs flew, and trust evaporated. Technology became the new battleground, with US restrictions on Chinese giants like Huawei. Now, suspicion and rivalry define the relationship, setting the stage for today's escalation. The era of uneasy partnership is over. Competition is the new normal. Why electric vehicles? Because they're the future, at the crossroads of manufacturing, batteries, software, and AI. The nation that leads in EVs will shape the 21st century's economy and technology. China made EV dominance a national priority, building the world's largest market and supply chain. Companies like BYD and NIO lead in battery tech and scale, producing high-quality EVs at low cost. The US is catching up, with Tesla and legacy automakers investing billions to electrify their fleets. Washington backs the push with tax credits and infrastructure, seeing EVs as vital for climate and competition. But as US makers eyed China's vast market, they hit barriers, while Washington feared a flood of cheap Chinese EVs. The result, EVs became a proxy for the larger US-China struggle for technological supremacy. What started as green innovation is now a high-stakes contest for global power. The race is on, and neither side can afford to lose. On October 15, 2025, China dropped its bombshell, a 75% tariff on US-made electric vehicles, effective in 2 weeks. The timing was deliberate, maximum disruption for American automakers. Beijing framed it as a defense against US protectionism. But the message was clear: China is done playing defense. Washington's response was swift: condemnation and vows to defend American workers, but no clear path forward. Tesla's US-made models are now priced out of China, and Ford and GM's export ambitions are dashed. The world's largest car market just slammed the door on American EVs. China's rhetoric is tough. We don't want a trade war, but we're not afraid of one. The move plays well at home and resonates with countries wary of US economic pressure. This is more than a tariff. It's a strategic strike, and the global auto industry is reeling. The US must now decide: escalate, negotiate, or adapt. The stakes have never been higher.
Markets reacted instantly. US stocks plunged, Asian markets tumbled, oil prices dropped, and safe haven assets soared. Investors fear this is just the start of a broader economic conflict. The auto industry's global supply chains are at risk. Tariffs force companies to rethink production suppliers and markets. The result? Higher costs, rising prices, and more inflation for consumers worldwide. Countries like Germany, Japan, and South Korea are caught in the crossfire, torn between US alliances and Chinese markets. The conflict is no longer bilateral. It's a global problem threatening to fracture the world economy. The US faces pressure to retaliate. More tariffs, tech restrictions, or sanctions could follow. China would likely hit back, fueling a cycle of escalation. Each move raises the stakes, making compromise harder and risking a downward spiral. The rules-based trading system is under threat. The world is bracing for impact. Beyond headlines, ordinary people will feel the pain. American consumers face fewer choices and higher prices as global instability drives up EV costs. If the US retaliates, affordable Chinese EVs could disappear, slowing the green transition. Chinese buyers lose access to high-end American models, shrinking competition and innovation. Protectionism often backfires. Consumers everywhere pay the price. For workers, the stakes are even higher. US auto workers face layoffs as exports to China collapse, threatening the promise of green jobs. Chinese factories could also suffer if global trade slows. In a connected world, shocks ripple everywhere. No one is immune. In this trade war, there are no real winners, just collateral damage. What do the experts say? Dr. Evelyn Reed calls China's tariff the most aggressive trade move in decades. A political statement, not just economics. Beijing is testing US resolve and alliance unity, willing to endure pain to push back. General Robert Adams warns, "We're seeing the weaponization of economic ties. What once stabilized now coerces." The battle for tech supremacy, EVs, AI, is the new great game. Some, like Dr. Li Wei, warn China risks scaring off global investors, accelerating the shift of supply chains to other countries. That could hurt China's own growth in the long run. Most experts agree escalation is dangerous for all. Nobel laureates warn a full-scale trade war is the greatest threat to global prosperity. The rational path is dialogue and compromise, but political pressures push both sides toward confrontation. The question, can reason prevail over rivalry? The world is watching and waiting. The next moves will shape the future. This isn't just a US-China fight, it's a global realignment. US allies in Europe and Asia are caught in the middle. The EU, a major auto power, shares US concerns but fears Chinese retaliation. Europe may seek a third way, strategic autonomy, building its own defenses and influence. In Asia, Japan and South Korea depend on US security but need Chinese markets. They'll try to balance support for Washington with economic ties to Beijing. Emerging powers like India and Brazil could benefit as companies shift supply chains away from China. But no one wants to be a pawn in a superpower rivalry. Every nation is recalculating, seeking to protect its own interests in a turbulent world. The global order is in flux, and the outcome is far from certain. We're at a crossroads. China's tariff is a symptom of a deeper, dangerous rivalry. Escalation leads to division, instability, and fractured global supply chains. The responsibility lies with leaders in Washington and Beijing to pull back from the brink. Dialogue, not brinkmanship, is the only way forward. The world needs statesmanship, not slogans. Citizens must demand thoughtful cooperative policies, not simplistic blame. The green transition requires global cooperation, not trade wars. The choices made now will echo for generations. Will we repeat the mistakes of the past, or find a new balance between competition and cooperation? The stakes are too high to fail. The future depends on what happens next.